website where you can prepare for your CA exam online. You have to use referral code CA Satbir, and just for 499 rupees monthly payment you can join unacademy.com/plus website. There are many benefits of joining this website online, like you can participate, you can learn from your favorite teacher online, you can participate in dedicated doubt sessions. With one subscription you can have unlimited access, real-time interaction with the teacher you can do. Apart from this, friends, there are certain benefits of Unacademy Plus subscription. You can ask doubt in live class and download the videos and watch offline. The best thing is that all of these things you can take just for 499 rupees only. Referral code you have to use is CA Satbir, and goal CA exam you have to choose. So choose goal CA exam and referral code of CA Satbir just for 499 rupees. As of now you can join for 1 month, and you can learn from your favorite teacher. You can participate in unlimited live classes like GST, costing, accounting, auditing, all subjects you can study online, and you can also download the videos and watch offline. So friends, use referral code CSATBIR and get 10% discount on your subscription on unacademy.com/plus website. So friends, let's start today's session. Today's our session is on GST practice sessions. I'm also taking GST classes on unacademy.com/plus website, so you can join there also and participate in our course. Timing of GST course is from 12 to 1 p.m. online. I'm taking the classes, and for income tax it's from 6 p.m. to 8 p.m. in the evening, so you can participate in those classes also. So friends, let's set the rule of this class, that you should have a copy and pen with you, so that whenever we discuss the question, then you take the correct answer or note down in your notebook, so that you can compare the correct answer with the answer that we provide to you. So let's start our class. Which of the following supply involving movement of the goods is an intrastate supply? Location of the supplier in Kerala and place of supply in Tamil Nadu. Location of supplier in Karnataka and place of supply in Karnataka. Location of supplier in Kerala and place of supply in Andhra Pradesh. None of the above. So friends, you can take more time if required by pausing this recording and replay it again once you have decided your correct answer. Here I am discussing correct answer. Correct answer is, as per the provision of section 8 of IGST Act, is very important that place of supply provision are given in the IGST Act and not in the CGST or SGST Act. So you have to refer IGST Act. It's an intrastate supply. We say they are subject to the provision of section 10, supply of goods where the location of the supplier and the place of supply of the goods are in the same state or in the same union territory, then it will be treated as intrastate supply, that is within the state supply. So location of the supplier and place of supply is very important under GST, because only then it will decide whether you have to pay CGST or SGST or IGST has to be paid. So in this case, location of the supply is in Karnataka and place of supply in Karnataka, then only it can be called as interstate supply because it is within the state supply, and you have to charge CGST and Karnataka GST in this case on this supply. So I have covered a complete course on unacademy.com on my profile Satbir Singh regarding place of supply and time of supply provisions. So you can refer to those courses also on my profile Satbir Singh on unacademy.com. So friends, next question is, place of supply in case of installation of elevator is where the movement of elevator commences from the supplier's place, where the delivery of elevator is taken, where the installation of elevator is made, where the address of the recipient is mentioned in the invoice. So you can take more time if required by pausing this recording, but you should try to answer within a limited time, so that in your exam also you can attempt all the questions if you have practiced to answer within a time. So friends, here you will refer this slide, that place of supply of goods within India in case of the movement of goods involved, then location of the goods at the time at which the movement terminate for delivery to the recipient. If no movement of the goods involved, then location of the goods at the time of delivery to the recipient. Supplied on the direction of third party, then principal place of business of the third party's place of supply. If goods are assembled or installed at site, then place of supply is placed on installation of assembly. If goods are supplied on board or conveyance, then location at which such goods are taken on board. So these are the different type of places of supply under GST. So in this case, what is being supplied is the elevator, and in case of an elevator, installation of elevator is place of supply is where the installation of elevator is made. So correct answer is C. So if you have any doubt on any provisions, then you can comment on my profile Satbir Singh on unacademy.com. So let's discuss, friends. Next question. Real estate agent in Delhi charges brokerage fees to company located in Chandigarh for assistance in getting a commercial property in Kolkata. Which is the place of supply in this case? Delhi, Chandigarh, Kolkata. So we have covered in detail all provisions of place of supply, time of supply on unacademy.com/plus website. You can refer to my lectures on unacademy.com. You can join by using referral code Satbir on unacademy.com/plus website. There are many benefits. So friends, here correct answer is place of supply of services upper section 12 of GST Act, where supplier and recipient are in India. In case the service is directly relating to immovable property, then it will be grant of right, construction, use, accommodation, marriage, letting out, architect survey extra. In case boat vessel extra, lodging, club it extra. Then in all these cases, only service related to above, it is the location of the property, boat or vessel. And if the property is outside India, then location of the recipient. In case of restaurant, service, catering, personal grooming, fitness, beauty treatment, health service, place of supply is the actual location where services are performed. So in this case, since it is a service relating to immovable property, therefore place of supply would be where the property is situated. Here property is situated in Kolkata, therefore place of supply will be in Kolkata, and real estate agent is in Delhi, so IGST will apply. In this case, it is an interstate supply. So next question, Mr. A, who has opted for composition scheme, supply the goods worth ₹24300 to Mr. B and issue an invoice on 25th December 2017 for ₹24300, and Mr. B paid ₹25,000 on 1st January 2018 against a supply of goods. Excess ₹700 being less than ₹1000 is adjusted in the next invoice for supply of goods issued on 5th January 2018. Identify the time of supply and value of supply. ₹25,000 1st January 2018 for ₹24300, 25th December 2017, and for ₹700 1st January 2018 for ₹24300, 25th December 2017, and for ₹700 5th January 2018. Or B or C are the optional supplier who has opted for composition levy. So you have to decide correct answer. So you can take more time if required. You can pause this recording and decide. So friends, here correct answer is time of supply of the goods. If excess payment received up to 1000, then it is given in the GST Act that where the supplier of taxable goods receive an amount up to 1000 rupees in excess of the amount indicated in the tax invoice, time of supply to the extent of such excess amount shall be at the option of the such supplier, be the date of issue of invoice in respect of such excess amount as per section 12 of the CGST Act. So here it will be D, that is B or C at the option of the supplier who has opted for the composition levy. At the option B, 24,300 deemed date of supply. Date of supply will be 25th December 2017 for ₹700 that is received in excess. Can be taken as 1st January 2018. The date on which the payment is made, or 5th January 2018 can be the date on which the next is adjusted in the next invoice, which is issued on 5th January 2018. So it is the option which is available. Value of services rendered is rupees 1 lakh. Date of issue of invoice is 5th August 2017. Advance received is 25,000. On 20th July 2017, balance amount is received on 7th August 2017. What is the time of supply for rupees 1 lakh? 5th August 2017 for rupees 1 lakh, 20th July 2017 for rupees 1 lakh, 20th July 2017 for rupees 25,000, and 5th August 2017 for rupees 75,000, 20th July 2017 rupees 25,000, 7th August 2017 rupees 75,000. Friends, I have covered complete lecture on what is time of supply and value of supply and the GST place of supply. So you can refer to my lectures on unacademy.com/plus website. If you have any doubt, you can participate in live class and also doubt clearing class, or every fourth class is doubt clearing class. You can discuss your doubt there. So friends, here if you will refer section 13 of the CGST and SGST Act, which provide for time of supply of services, the time of supply of services shall be the earlier of the following, namely the date of issue of the invoice by the supplier, if the invoice is issued within the time under section 31, or the date of receipt of the payment, whichever is earlier, or the date of provision of the service. If the invoice is not issued within the period specified under section 31, date of receipt of the payment, whichever is earlier, the date on which the recipient shows the receipt of service in his books of account in the case where the provision of clause A and B are not applicable. So friends, here in this case 20th July 2017 will be the date for 25,000 rupees, because advance is received. So advance is received before issue the invoice, so it will be the time of supply. And next is 5th August 2017, the date on which invoice has been issued for the balance amount of 75,000. So this will be the time of supply. Because in case of services, if advance is received, GST has to be paid, but in case of the goods, if advance is received, then the government has issued the notification, then GST not required to pay it at the time of receipt of advance. It has to be paid at the time of supply of goods only. There was increase in tax rate from 12% to 18% with effect from 1st February 2018. Which of the following rate is applicable where services are provided after change in rate of tax in February 2018, but invoice issued and payment received both in January 2018? 12% as it is lower of the two, 18% as it is higher of the two, 12% as invoice and payment were received prior to the rate change, 18% as the supply were completed after rate change. So friends, you can take more time if required by pausing this recording, and then you can replay it again. Here correct answer is, if you will refer this table, then if 2 events out of the 3 events occurred before the old rate, then occurred before then the old rate, otherwise new rate will apply. Here in this case number 1, let's see. On 10th July 2017, the service goods were supplied and invoice date is 20th July and payment date is 21st July, and rate change is on 1st August 2017. So here 2 events, all the 3 events are before the rate change. So whatever is the earlier date, invoice date or date of receipt of payment, that is 20th July 2017 would be the date, and GST rate on that date was 18%. So you will calculate like this. And in case number say 4th, the date of supply of services is on 10th July, but invoice date and payment date is after the change in the GST rate. So 2 events occur after the change in the, out of the 3 events, 2 events occur after the change in GST rates. So you will take the date of receipt of payment, whichever is earlier, invoice date or receipt or payment received date. On that date, what was the what are the rate? So friends, the rate are 12% on that date. So you will take the 12% GST rate. So in this way you will calculate So in this case 12% will be the rate of GST that you will apply, because lower of the two has to be because invoice and payment were received prior to the rate change, therefore 12% will be the GST rate. Where the movement of goods is caused by an unregistered person, the e-way bill shall be generated by unregistered person himself, the transporter, either of them or neither of them. So friends, if you want more time, then you can pause this recording. Here correct answer is if the movement are caused by unregistered person, then rule 138 sub rule 3 of the CGST rule says as follow, that where the movement is caused by unregistered person, either in his own convenience or a hired one, or through a transporter, he or the transporter may at their option generate the e-way bill in form GSTWB01 on the common portal in the manner specified in this rule. So there is an option given to the transporter or the unregistered person. Therefore in this case either of them can generate the e-way bill if movement of the goods is caused by unregistered person. Whether definition of input includes capital goods under GST? Yes, no, certain capital goods only, none of the above. So we have discussed a complete lecture on what is input as credit on GST. So you can refer to my lecture on Unacademy.com. I am also taking special classes in the month of December, short classes on input as credit on GST. So you can join those classes also on Unacademy.com. So friends, here correct answer is no, input does not include capital goods. There is a separate definition for input and capital goods under GST. When you will refer the definition of input, it specifically say that input does not include capital goods. Is it mandatory to capitalize capital goods in books of account? Yes, no, optional, or none of the above. So it's very important that you understand the concept of capital goods, because you have to make a special treatment of capital goods in your books of account, and when you make sale of those capital goods, then again there is a separate treatment. So friends, here correct answer is yes, it is mandatory to capitalize the capital goods in books of account, because whatever is capitalized is referred to as capital goods under GST. Whether credit on capital goods can be taken immediately on the receipt of the goods? Yes, no, after usage of such capital goods after capitalizing in books of account. So whether you can take credit on capital goods immediately under GST. So friends, here correct answer is yes, because before GST you could take only 50% input as credit in the year in which it is received, and 50% has to be taken the next year. But under GST all input as credit can be taken in the same year when the goods are received. The term used in the course or furtherance of business means it should be directly correlated to your output supply. It is planned to use in the course of business. It is used or intended to be used in the course of business. It is used in the course of business for making output supply. Which one is the correct answer? So friend, let's crack it. So here correct answer is C, that is it is used or intended to be used in the course of furtherance in the course of business. So under GST, if the input or capital goods are used, that is already used or will be used in future, then you can claim input as credit on those inputs and capital goods. So it's not because under the income tax act you will see that you can claim depreciation only when the asset is put to use. If it's not put to use, you cannot claim depreciation. But under income tax, but under GST, even if the input or capital goods are not used, they will be used in future. Then even then you can claim input as credit. Section 16(2) of the GST Act, how many conditions are to be fulfilled for the entitlement of the credit? All four conditions, any two conditions, condition not specified or none of the above. So friends, here correct answer is that all the four conditions are to be satisfied before the person can claim input as credit. These conditions are under section 16(2). That is, the person must have received a tax invoice, bill of supply, tax invoice, bill of entry, extra, and he must have received the goods or services. The supplier of the goods or services must have paid the GST to the government, and recipient must have filed the return. So all the conditions are required to fulfilled. Whether credit on input used, inputs should be availed based on receipt of document or receipt of goods. Receipt of goods, receipt of document, both, either receipt of documents or receipt of goods. So friends, here correct answer is C, that is, you must have received the document for the goods as well as the goods, so that you can claim input as credit. But there are certain exceptions when you have received the goods, but when you have received the document but not received the goods, still you can claim the input as credit. That we will discuss in our next slides. In case supplier has deposited the tax but the receiver has not received the documents, is receiver entitled to avail the credit? Yes, it will be auto-populated in recipient monthly returns. No, as one of the conditions of section 16(2) is not fulfilled. Yes, if the receiver can prove later that documents are received subsequently. None of the above. So friends, here correct answer is no, as one of the conditions section 2 is not fulfilled. Therefore, all the four conditions have to be fulfilled, only then you will be entitled to avail input as credit on those supply. Input as credit on capital goods and input can be availed in one installment or in multiple installments, in 36 installments, in 12 installments, in one installment, or in 6 installments. So which one is the correct answer? So friends, here correct answer is C, that is, input as credit can be availed in one installment on inputs and capital goods under GST. There is no concept of multiple availment of input as credit in multiple installments. The tax paying document in section 16(2) is bill of entry, invoice raised on RCM, supplies extra acknowledged copy of tax paid to department, supply invoice by the recipient, any of the above. What are the tax paying documents? Because you can claim input as credit based on tax paying documents only. So here friends, correct answer is A, that is, bill of entry, invoice raised on reverse charge mechanism, supplies extra are the example of these tax paying documents. Time limit to pay the value of supply with taxes to avail input as credit: 3 months, 6 months, 180 days till the date of filing of annual return. So friends, here correct answer is C, that is 180 days. You have to pay you have to make the payment of to your supplier, not only of the value of the goods or services but also the taxes involved in that. If you will not pay within 180 days, then you will not be able to claim input tax credit. What is the time limit for taking input tax credit by registered taxable person? No time limit has been specified. 1 year from the date of invoice. Due date of furnishing of the return under section 39 for the month of September following the end of the financial year to which such invoice or invoice relating to such debit note pertains. Due date of furnishing of the return under section 39 for the month of September following the end of the financial year to which such invoice or invoice relating to such debit note pertains, or furnishing of the relevant annual return whichever is earlier. So friends, here correct answer is D. Due date of furnishing of return under section 39 for the month of September following the end of the financial year to which such invoice or invoice relating to such debit note pertains, or furnishing the relevant annual return whichever is earlier. Can the recipient avail the input as credit for the part payment of the amount to the supplier within 180 days? Yes, on full tax amount and partly value amount. No, he cannot until the full amount is paid to the supplier. Yes, but proportionately to the extent of value and tax paid. Not applicable. Is eligible to claim refund in respect of export of goods. So friends, here correct answer is yes, but proportionately to the extent of value and tax paid. Therefore, if says goods worth rupees 50,000 were procured, but only 25,000, including GST, 50,000 goods were procured, but only payment for only 25,000 was made to the supplier. So only proportionate input as credit can be claimed, and full input as credit cannot be claimed. Whether credit can be availed without actual receipt of goods, where goods are transferred through transfer of document of title before or during the moment of goods? Yes, no, yes. In specific instances only. Can be availed only after transfer of document of title after moment of the goods. So friends, here correct answer is yes, in specific instances only. Even though actual receipt of goods and services are not actual goods or services are not actual goods are not received, even then you can claim input as credit. For example, if the goods has been transferred to job worker directly, and in that case it will not be received at your place, so input as credit can be claimed by the principal. Whether depreciation on tax component of capital goods and plant and machinery, and whether input as credit is permissible. Yes, no, input as credit is eligible if depreciation on tax component is not availed. None of the above. So friends, we have covered a complete course on GST, which is available on unacademy.com on my profile Satbir Singh, which you can refer, and if you have any doubt at any point of time, then you can comment on unacademy.com, participate in live class, and can clear your doubt also. So friends, here correct answer is C. Input as credit is eligible if depreciation on tax component is not availed. What is the maximum time limit to claim the input as credit? Till the date of filing of annual return, due date of September month, which is following the financial year, earliest of A or B, later of A or B. So what is the time limit within which input as credit can be claimed on the invoices? Friends, you should tick on your notebook also, if you are keeping notebook in front of you, and you can tick which one is the correct answer, so that you can compare at the end of the session that how many questions you have answered correctly. Here correct answer is C, that is earliest of A or B. If the due date of say annual return is 31st December, but you are filing the return in the month of 31st July, then up to that 31st July only, after end of the financial year, you can claim input as credit. But in case you have not filed annual return, then after the end of the financial year, till the due date of filing the return for the month of September, you can claim input as credits. Therefore, for financial year 1920, input as credit can be claimed till 20th October 2020, because the due date for filing September month return is 20th after the end of the September month. Proportionate credit for capital goods is allowed for business and non-business purpose, for personal or non-business purpose, both of them, or none of the above. So we have discussed in detail how input as credit has to be claimed on capital goods. You can refer to my lecture on which is available on unacademy.com. So friends, here correct answer is A, that is for business and non-business purpose. Exempt supplies under section 17, apportionment of credit includes only exemptor supply, reverse charge supplies, and sale of land. Exemptor supply, reverse charge supply, transaction securities, sale of land, sale of building, none of the above. So friends, here correct answer is C, that is exemptor supply, reverse charge supply, transaction security, sale of land, and sale of building it extra. All these are exempt supply as per section 17, although the sale of building or sale of land is not neither supply of goods, neither supply of service, but for the purpose of section 16, for exemptor supply, you have to treat it as exempt supply, and proportionate input as credit has to be reversed, because only for taxable supply you can claim input as credit under GST. Banking company or financial institution have an option of claiming eligible credit or 50% of the credit, only 50% credit, only eligible credit, and 50% credit. Friends, the correct answer is A, that is eligible credit or 50% credit can be claimed by banking company. Can banking company or financial institution withdraw the option of availing actual credit or 50% credit any time in the financial year? Yes, no, yes with permission of authorized officer, not applicable. So friends, here correct answer is no. Where a supplier of goods or service pay tax under section 74, 120 and 130, that is fraud, willful misstatement, etc., then receiver of the goods can avail his credit. Yes, no, after receipt of goods or service, after receipt of invoice for goods or service. So if tax has been paid due to the fraud or willful misstatement, suppression or factory extra, whether you can claim input as credit, recipient can claim input as credit. Here answer is no, because if you will refer section 17 subsection 5 of the GST Act, then it specifically block these type of tax, these kind of input as credit, because if it is paid due to the fraud, willful misstatement, then you cannot claim input as credit. NSSC obtain new registration, voluntary registration, change of scheme from composition to regular scheme, and from exempted goods and service to taxable goods and service. It can avail the credit on inputs laying in stock. What is the time limit for taking the said credit? 1 year from the date of the invoice, 3 years from the date of the invoice, 5 years from the date of the invoice, or none of the above? So friends, here correct answer is 1 year from the date of the invoice. It's mentioned under section 18 of the GST Act that if a person wants to obtain new registration, or even though his limit is less than 20 lakh, but he wants to register under GST, wants to take voluntary registration, or he wants to come from composition to regular scheme under GST, or from exempted goods and services to taxable goods and service, then if his supply become taxable, then he can claim input as credit on the stock, but only on those invoices only within 1 year from the date of the invoice which are available with him. So credit on input service or capital goods held in stock can be availed in case of new registration, voluntary registration. Yes, no, yes on input service only, yes on capital goods only. Friends, here correct answer is no. Input service or capital goods held in stock cannot be availed in case of new registration, voluntary registration. Only credit of inputs is available. Input service and capital goods input as credit is not available. In case of compulsory registration, input as credit can be availed on stock held on the day immediately preceding the date from which he become liable to pay tax under the provisions of this act, provided application for registration is filed within 30 days from the due date. Stock held on the day immediately preceding the date of the grant of registration under the provisions of the act. Stock held on the day immediately preceding the date of application of registration under the provision of this act. None of the above. So friends, here correct answer is A, that is stock held on the day immediately preceding the date from which he become liable to pay tax under the provision of this act, provided application for registration is filed within 30 days from the due date. In case of voluntary registration, input as credit can be availed on stock held on the day immediately preceding the day from which he become liable to pay tax under the provisions of this act on the stock held on the day immediately preceding the date of grant of registration under the provisions of this act on stock held on the day immediately preceding the date of application of registration under the provisions of this act, and none of the above. So friends, here correct answer is B, that in a stock held on the day immediately preceding the date of grant of registration under the provision of this act. Because in case of voluntary registration, input as credit can be availed but on the stock which is available 1 day before the date of grant of registration. But if the persons become eligible for registration, suppose his turnover exceed 20 lakh and he applies for registration within 30 days, then he can take the input as credit on the stock which is available before the date he become liable for registrations one day before. So this is the basic difference between voluntary registration and regular registration. Eligibility of credit on capital goods in case of change of scheme from composition scheme to regular scheme. Eligible during application for regular scheme, not eligible. Yes, immediately before the date from which he become liable to pay tax under the regular scheme, or none of the above. So friends, here correct answer is yes, immediately before the date from which he become liable to pay tax under the regular scheme. Can the unutilized input tax credit be transferred in case of change in constitution of the business? Not possible. No, it will not be exhausted. Yes, it will be transferred only if there is a provision for transfer of liabilities. It will be transferred only if it is shown in books of account of transferor. So friends, here correct answer is yes, it will be transferred only if there is a provision for transfer of liabilities. Is input as credit fully restricted in case of switchover from taxable to exempt supplies? Yes, no, proportionately restricted or not restricted? Friends, here correct answer is yes, input tax credit is restricted in case of the supplies are taxable but later on it become exempt supply, then you cannot claim input tax credit. Whatever is input tax credit available in your books of account, you have to reverse it if supply become an exempt supply. Is input tax credit to be paid in case of switchover from taxable to exempt supplies? Yes, equivalent to the credit in respect of input held in stock and on capital goods held in stock. No, yes, full credit. No, should be debited to electronic credit ledger. So correct answer is friend yes, equivalent to the credit in respect of input held in stock including semi-finished and finished goods and on the capital goods held in the stock. Is input tax to be reversed in case of supply of capital goods? Yes, fully. No, yes, to the extent of credit taken as reduced by the prescribed percentage or tax on transaction value whichever is higher. Yes, to the extent of transaction value of such goods. So friends, here correct answer is yes, to the extent of credit taken as reduced by the prescribed percentage of transaction value whichever is higher, because if you have purchased capital goods and you have taken the input as credit and later on you sell those capital goods, make sale of those capital goods, then you have to pay input, you have to pay GST, but it will be calculated based on the input as credit that you have taken, and 5% is per quarter part thereof has to be reduced, or the tax on transaction value whichever is higher, you are required to pay that amount. Time limit beyond which if goods are not returned, the input sent for job work shall be treated as supply 1 year, 5 years, 6 months or 7 years. So friends, here correct answer is that within 1 year, if the goods are sent to the job worker, inputs are sent and these are not received within 1 year from the job worker, then the day on which you have sent these goods to the job worker will be treated as the date of supply, and you have to pay GST along with the interest. Time limit beyond which your goods are not returned. The capital goods sent for job work shall be treated as supply 1 year, 5 years, 3 years, or 7 years. Suppose you sent the capital goods to the job worker and these are not received back, then what will be the time? So in this case, what will be the date of supply? Friends, in this case it will be 3 years, because if the inputs are not received back from the job worker, time limit is 1 year. But if the capital goods are sent, these are not received back, then time limit 3 years. Principal entitled for input as credit on input sent for job work. If goods sent are returned within 1 year, if goods sent are returned within 3 years, if goods sent are returned within 6 months, if goods sent are returned within 9 months. So if the inputs are sent to the job worker, then the principal can claim input as credit on those inputs. But if these are but there is a condition. So condition is A, that is the goods must be returned within 1 year from the job worker premises. These are to be received these has to be received within 1 year from the date when these were sent to the job worker. Principal entitled for input as credit on capital goods sent for job work. If goods are returned within 1 year, if goods sent are returned within 3 years, if goods sent are returned within 6 months, if goods sent are returned within 9 months. So friends, please do rating on my profile Satbir Singh on Unacademy.com. It's very important for me, your rating and your feedback. So please do your rating and feedback and give your feedback. So friends, here correct answer is B. If goods sent are returned within 3 years, then principal entitled for input as credit. Is the principal entitled for credit of goods through though he has not received the goods and he has sent to the job worker directly by vendor? Yes, no, yes, vendor should be located in same place. None of the above. So friends, here correct answer is A. Yes, the principal entitled for credit of capital goods though he has not received the goods. So say the principal send the good directly to the job worker premises without receiving the goods at his place of business, then also he is entitled to avail input as credit. In case of input service distributor, whether distributor and recipient should have same permanent account number? Yes, no, yes. If in same state and different in other state, none of the above. So we have discussed a complete lecture on input service distributor, which is available on my profile Satbir Singh on Unacademy.com. You can refer to that chapter if you want to study this concept in detail. Because we have discussed all these concepts in detail with examples and illustrations, so you can refer to those lectures. Here correct answer is yes. The PAN number should be the same, input service distributor and of the recipient, only then they would be called as the input service distributor and recipient, and only then input service distributor can transfer the input as credit. Can the credit distributed by an ISD exceed the amount available for distribution? Yes, no, maybe, none of the above. Say input as credit available with input service distribute is only 10,000. Can he distribute more than that, say 11,000? Answer here is no. Input service distributor cannot distribute the excess amount which is available with him. If the credit applicable to more than one recipient, then it shall be distributed equally on pro rata basis to the aggregate turnover of such recipient proportionately as per ad hoc ratio. So if the input as credit is available for more than one recipient, then how this has to be distributed? By input service distributor. Say a bank in Kolkata has 2 branches in Punjab and Haryana, and as an input service distributor, he wants to distribute the credit. How it has to be distributed between the branches? Here, friends, correct answer is B, that is on pro rata basis to the aggregate turnover of such recipient. Next question, the credit attributable to a particular recipient shall be distributed to only to that recipient, to all the recipients, to few recipients, none of the recipients. So how the credit is attributable to particular recipient should be distributed? So friends, here correct answer is that only to that recipient. A person is entitled to take credit of input tax as self-assessed in the return and credited to electronic credit ledger on final basis, provisional basis, partly provisional, partly final basis, or none of the above. So friends, here correct answer is the provisional basis. Person entitled to take input as credit of input tax as self-assessed in the return and credited to electronic credit ledger on provisional basis. Provisional input tax credit can be utilized against any tax liability, self-assessed output tax liability, interest and penalty, and fine. So friends, here correct answer is B, that is self-assessed output tax liability. So you cannot use input as credit for payment of interest or penalty, or if the demand is assessed by the GST officer, then also you cannot use input as credit, you have to pay in cash. Matching of input as credit on inward supply by recipient is undertaken with monthly return filed by the supplier. Outward supply filed by the supplier. Invoice is maintained by the supplier, or none of the above. So friends, correct answer is that outward supply filed by the supplier. Is it mandatory that the tax on supply has to be paid by the supplier so that the recipient can claim input as credit? Yes, no, option not applicable. Whether the supplier has to pay GST, only then input as credit can be claimed by the recipient. Friends, here correct answer is yes, only then input as credit can be claimed by the recipient if GST is paid by the supplier. If there is a mismatch of supplier's outward supply and recipient's claim for input as credit on the same transaction, it shall be added to as output tax liability in the hands of the receiver. It shall be reduced as output tax liability in the hands of the receiver. It shall be increased as input tax liability in the hands of the receiver. It shall be decreased as input tax credit in the hands of supplier. So friends, here correct answer is that it shall be added as output tax liability in the hands of a receiver. Input as credited in electronic credit ledger can be utilized for payment of interest, payment of penalty, payment of fine, and payment of taxes. So here friends, correct answer is that payment of taxes. So you cannot use input as credit for penalty, fine or taxes. When the goods are sent from one job worker to another, the challan may be issued only by the principal, only by job worker sending goods to another job worker, by any one of the above two. So friend, here correct answer is that by any one of the above two, challan may be issued either by the principal or the job worker sending the goods to the another job worker. When the goods are sent from one job worker to another, the challan issued by the principal may be endorsed by the job worker sending the goods to another job worker, may be endorsed by the job worker receiving the goods, cannot be endorsed as such. So friends, here correct answer is may be endorsed by the job worker sending the goods to another job worker. The detail of challan respect to the goods dispatched to a job worker or received from job worker or sent from one job worker to another during a quarter shall be included in form GST ITC 3, GST ITC 4, GSTR 2 or none of the above. Here friends, correct answer is GST ITC 4. ITC can be taken on goods if goods not received by a registered person but by his agent on his direction, by the job worker on his instructions, by any other persons on his direction, or any of the above. Here correct answer is any of the above. ITC can be taken if goods are not registered but by his agent on his direction. So goods are sent directly by the principal to his agent or to the job worker or to any other person direction, that is through third person, then input as credit can be taken. ITC can be availed on possession of prescribed invoice, debit note, receipt of goods or service, tax on such supply has been paid to the government, and return being furnished by the supplier fulfilling all the above conditions. So friends, here correct answer is D, that is fulfilling of the above conditions. ITC can be availed if you have tax paying documents, you have received the goods and service, tax has been paid to the credit of the government and returned has been filed. Maximum time limit for availing input as credit is the due date of filing annual return, due date of filing annual return under section 39 for the month of September, earliest of the above two and later of the above two. Friends, it is earliest of the above two, either the due date of filing the annual return or the due date for the month of September after the end of the financial year is the maximum time limit up to which input as credit can be claimed for any financial year. ITC can be claimed by a registered person for taxable supply for business purpose, taxable supply for non-business purpose, exempted supply, non-taxable supply, or all of the above. So friends, here correct answer is taxable supply for business purpose. ITC on motor vehicle can be claimed by any registered person. Registered person engaged in the same line of business, any registered person engaged in exempted supply, or any of the above. So friends, the correct answer will be that is the registered person engaged in same line of business. Person registered under the composite scheme can avail ITC on supply of taxable goods or service, receipt of goods and service on specified time period, payment to the supplier, none of the above. So friends, here correct answer is D, that is none of the above, because the person who is registered under the GST under the composition scheme cannot take avail input as credit. Input as credit can be claimed on goods and service for personal use if payment to supplier has been made, return being filed, all of the above, no ITC can be claimed. Here correct answer is no, input as credit can be claimed if the goods or service are used for personal purpose, because the goods and service must be used during the business, in the course of business, or for furtherance of the business. They can be used or intended to be used. ITC on works contract service can be availed only if engaged in same line of business, service related to movable property, service related to immovable property, or all of the above. मनीष जी ने ज्वाइन किया। हाय मनीष जी, अगर आपका कोई क्वेश्चन हो इनकम टैक्स से रिलेटेड तो आप मुझसे पूछ सकते हैं, या जीएसटी से रिलेटेड। इसके अलावा आपकी जो है मेरे लिए बहुत इंपॉर्टेंट है आपकी फीडबैक और रेटिंग। तो फिर यहाँ पे engaged in the same line of business is the correct answer. So friends, these kind of the questions you will come in your exam, and you can discuss all these questions, and if you have any doubt you can discuss with me on unacademy.com on my profile Satbir Singh. So if you have a friend or a relative who's preparing for CA exam, CS exam, chartered accountant, cost accountant, then he can join my profile CA Satbir Singh on unacademy.com, referral code CA Satbir. He has to use just for 499 rupees monthly payment. He can join unacademy.com/plus subscription. Here he can learn from his favorite teachers. Dedicated doubt session are there in one subscription. Unlimited live classes are there. GST, costing, accounting, auditing. You can study all the classes online. You can do real-time interaction with the teacher. You can ask doubt in the class. You can download the videos and watch them offline. So friends, you can also get 10% discount if you will use referral code CSADBIR on unacademy.com/plus website. Therefore friends, join these classes, and if you have any doubt at any point of time, you can contact me on unacademy.com, and also participate in a live doubt clearing class. Also subscribe to this YouTube channel of unacademy.com. I will be giving live classes on GST and income tax on this channel also, as well as free live classes are also available on unacademy.com. So you should join my profile CA Satbir Singh. There are free special live classes, anybody can join them. So we will discuss more concept on GST there. Thank you friends.